Yeah. Now we will revise chapter 10, which talks about process costing. Even process costing is one of the method of costing, guys, which is followed by an entity which follow different processes to convert their raw material into output. We call this as conversion process. Clear? Conversion of what, sir? Raw material into output. Guys, the conversion process will include two types of cost. What is it? Labor and overhead. Once I purchase raw material, started using it in the production process, we will take lot of efforts to convert that raw material into output. That process is called conversion process or manufacturing process. If organization is following different processes to convert their raw material into output, they follow process costing. Sir, by following process costing, what do? They calculate the cost of each process. And it will also help them to know which process is performing better, who is incurring more cost, who is contributing more to the organization, which process. So in this case, guys, which would be the cost object? For us, the cost object would be process. So we are allocating the cost for each process separately. So assume there are three different processes in an organization. We will prepare three different costs. All the expenses relating to the process would be debited, and if there is any sales or output transferred to next process or loss, we will record it on the credit side. Normally, sales will not be done in the process accounts, guys. It will be done finally in the finished stock account or in the sales account. And in process costing, the output of process 1 will become the input of process 2. Same way, the output of process 2 will become the input for process 3. Clear? And it has to go in a sequence. In your exam, they can ask you to prepare process account. Either one process account or multiple process account. Multiple process means maximum 2 or 3. Not more than that. Clear? Yes. And for the organization, for easy sake, they will keep a name for each process. There will be a name for each process. And in your exam and all, what they do is 1, 2, 3 or A, B, C like that. Clear? Or they may also give the name used in the industry. Yes. So you can see raw material will be introduced into the production process where in the first process. Then we will send whatever work is done in process 1. We'll go to process 2. Then next to process 3. Last is finished goods when it is ready to sell. When it is ready to sell. So I told you we need to prepare a separate process account for each and every process. Sir, what do we record there? Guys, I have tried to give everything here in one account. This is just like a format for you. Just like a format. I will also discuss along with some question or examples later. But first pay attention, understand the format. Process account is like any expense account. Yeah, we will debit with all the expenses and credit with. Normally incomes are not there. Whatever you transfer to next process or the loss. Or the loss. And loss means we will transfer it to the respective loss account. Clear? Yes. Listen. Now basic raw material means the raw material which is introduced in the first process. This is the raw material for the entire company. Clear? We will take that. Then there might be direct material for each and every process types. Clear? For example, sir, for process 2, process 3 also, can there be a direct material? Yes. Well, direct material means the material which is used by that process has direct. Clear? Sir, what is the difference between the basic and direct? Simple. Basic is nothing but this, guys. The raw material from which we started manufacturing. Whereas direct material, in case of process costing, is the materials used by the respective processes for the work which is assigned to them. For the work which is assigned to them. So this is also direct material, but for the company as a whole. Whereas this is the direct material for whom? For the respective processes. Clear? Yes. Sir, what if they have given indirect material, indirect labor and all? Everything you will record on the debit side only. Any expenses of the process, please record it on the debit side. So you can see labor, direct expenses, production overhead or any overhead, you will take it here. Okay, sir. Then all the expenses are recorded. Then if by chance if there is any defective or waste for rectifying that, I have incurred some cost, debit that. If at all it is given in the question. Then coming to the credit side, guys, important. Normal loss. Sir, what is normal loss? What is abnormal loss? There are two different types of losses in the production process, guys. Clear? If there is any loss which is unavoidable, which is uncontrollable, whatever I do, it is bound to happen. So I don't have any control over it. We call it as what? Normal loss. And the cost of normal loss will always be observed by good units. Will always be observed by good units. Means the cost per good unit will go up automatically. Clear? Yes, sir. So simple. Let me tell you. I will show you. Assume guys, I had purchased 100 units at 10,000 cost. Cost is fully debited. Yes. Now there is a loss of 5 units. There is a loss of 5 units. So remaining units is how much guys? 95. So whatever is the cost of these 5 units will be absorbed by whom? Remaining 95 units. Remaining 95 units. But this 5 units can bring me some small scrap value. Some small scrap value. So what should I do? I have to reduce it from 10,000. 10,000 is my total cost. But this 5 units which is lost, but I will get some scrap value. Assume it is 100 rupees. So I need to deduct 100 here. What is my net cost back? 9,900. So what is the cost of this 95 units if I ask you? How much is that? 9,900. But instead of deducting, as I already debited 10,000 on the debit side, what will I do is I will give a credit. I will give a credit of for what? Scrap value of normal loss units. This is not the cost, guys. This is the scrap value of normal loss units. Now, if I ask you, what is the net debit? 9,900. 9,900. Correct? Yes, sir. That is the cost of how many units? 95. How did I get 95? 100 minus 5. So if I ask you, what is the cost per unit now? 9,900 divided by 95. Hope you understood. Now, assume whatever is the cost per unit you have got, out of this 90, 95, 90 is sold, 5 is kept as closing stock. If I ask you what is the cost of output, then it is 90 into the cost whatever you have got. What is the cost of closing stock means? 5 into the cost per unit what you have got. Hope you understood. I repeat. Guys, I have incurred a total cost of 10,000 for 100 units input. Later, I got to know there is a 5 units loss, normal loss units. Now, whatever is the cost of it is a loss for me, will be absorbed by remaining units. How much is that? 95. But from this 5 units, I will get some small scrap value, which will reduce my cost. So, what is my net cost now? 10,000 minus 100, which is 9,900. Divide it by what is the good units remaining? 95. How did I get 95? 100 minus 5. You will get cost per unit. Assume out of this 95, the units transferred to next process is 90. So what is the cost of output transferred to next process? 90 into whatever cost per unit we have got. And 5 we have kept it as closing stock. What is the cost of closing stock? 5 into whatever cost per unit we have got. Got it? Yes. Yes. Let me read for normal loss. It is defined as the loss of material which is inherent. Inherent means I cannot avoid it, sir. It is bound to happen in the nature of work. Such a loss can be reasonably anticipated from the nature of the material, nature of operation, the experience and technical data. It is unavoidable because of the nature of material or the process. Guys, organization would have already be prepared for it. I know it will happen and I cannot control it. So not what normally organization will do is they will fix it as a percentage of input. 5%, 2%, 3%, they will fix. I know it will happen. Nah? I cannot control. So let better, I will be prepared for it. I will be prepared for it. So they will anticipate it and they would estimate what is the percentage. Assume 5% they have given. You need to apply this 5% on what? Input. Input, guys. Got it? Yes, sir. Treatment in cost accounts for normal loss. The cost of normal loss in practice is observed by whom? Good units. Good units means the remaining units. Clear? That is the total input minus the normal loss units. In my example, it was 95. Remaining units produced. The amount realized from the sale of normal loss units should be credited to processor. Why, sir? Because we have to reduce it from the cost. Now I cannot go and deduct it on the debit side. So instead of doing it, what do I do? I will give a credit. So after considering normal loss, how do I calculate the cost per unit, guys? Very simple. Take the total cost minus the scrap value of normal loss units. In my example, it was 1,000. I guess 1,000 or 10,000? 10,000. So 10,000 minus 100. Minus 100. How much it will give? 9,900. Divided by total input minus normal loss units. Clear? Yes, sir. That is 100 minus 5, which is 95. Which is 95. What do you get now here? Cost per unit. So you can see, guys, assume input is, I'm giving another example, input is 1000 and normal loss, normally they would have given in percentage. Assume it is 10% of input. So 10% of input comes to 100. What was the expected output now? What is the expected output? 900. But actually we ended up getting only 750 output. We ended up getting only 750 as good units of output. That means remaining 150 is what, sir? Abnormal loss. Abnormal loss. Guys, we call this as normal output. After reducing normal loss from input, whatever I was anticipating, whatever I was expecting is called normal output. If I get the same, there is no chance of abnormal loss or abnormal gain. But if my actual output is less than normal output, then the difference is what, guys? Abnormal loss. Abnormal loss. Or else, if I ask you, what is the total loss? 250. 250. If total loss is more than normal loss, what is the difference? Abnormal. Hope you understood. You can analyze in two ways. If your actual output is less than normal output, what is normal output? Input minus normal loss. Then what is the difference? Abnormal loss. Or else, your total loss is more than normal loss. What is the difference? Abnormal loss. Hope you understood. Now, what is abnormal loss? Abnormal loss is something which I would have controlled it. If I had taken precautionary measures, I would have avoided it, but I didn't do it. So it happened. So when it happened, it is because of my ignorance or negligence. Should I allow it for the cost of the units to increase? No. Please value it separately and send it to abnormal loss account. And from there, whatever is the net loss, you will transfer it to costing P&L. So you need to value the abnormal loss separately and send it to abnormal loss account. And in abnormal loss account, if you are receiving any scrap value, you will record it there and transfer the final net loss to costing P&L account. Okay, sir. Sure. Let us see. What is that abnormal loss? It is defined as the loss in excess of predetermined loss. What is the predetermined loss? Normal loss, which I had already expected it will happen. Have I predetermined it as I anticipated it? Yes. This type of loss may occur due to carelessness of workers, a bad plant design, or an operation sabotage, that is wastage. Such a loss cannot obviously be estimated in advance. Clear? So this normally will not be estimated in advance, guys, because this happened because of my mistake. Clear? It is a reason. Yes. So this would have not been anticipated. Normally this would be like balancing figure, guys. Balancing figure. Okay. What is the treatment for it in cost accounts? Do we value it separately or will we include it in the cost of good units? We will value it separately. The cost of abnormal process loss unit is equal to the cost of good unit. The total cost of abnormal process loss is credited to what? Process account from which it arises. Sir, why do we credit it, sir? That's very simple. Here already total cost is debited. Now, can I allow my abnormal loss to be absorbed by good units? No. So as the total cost already includes the cost of abnormal loss units, what do I do is I will try to remove it by giving a credit. By giving a credit. And I will treat it separately in abnormal loss. So how do we calculate this value, sir? Guys, listen here. In the units column, normally this will be the balancing figure. In the units column. Once I get the units, can I calculate the value? Yes. What is the formula? Here we discussed same formula. Now you need to apply multiply with what? Abnormal loss units. So what is the value of abnormal loss? Same formula into how many units, sir? Abnormal loss units. That's simple. What do you get here? Cost per unit. Multiply it with abnormal loss units. You got it? Yes. Now coming back to this. Pay attention. Guys, when you are preparing the process account, you need to present both the sides, units column also. Units amount. Okay. First thing you will close is units column. When you close units column, there are two possibilities. Either you will get abnormal loss or abnormal gain. If debit side is more, abnormal loss on the credit side. If by chance, if credit side is more, then on the debit side, abnormal gain. Either of the two, not both. I have given both here in the format. That doesn't mean that you will get both. Anyone. That is why I have highlighted. Okay. So whatever I have given in red color is like a balancing figure in units column. Once I close units column, now come to the amount column. Now you need to calculate the value of abnormal loss using the formula which I just now explained. Then output, you can keep it as balancing figure in the amount column. You can keep it as balancing figure in the amount column. Or else, even this you can calculate. How is it, sir? If you multiply year with the number of units of output, you will get the same answer. Here we multiplied with abnormal loss units. Now, instead of that, if I take the number of units transferred to next process, I will get what is the cost of output transferred to next process. Clear? And if at all, if they have given closing stock, you will consider that also on the credits. You will consider that also on the credit side. Okay. Now, whatever amount we will transfer to abnormal loss account, we will receive it there. We will receive it there. Yes, sir. So I will prepare an abnormal loss account. So you can see your process account, whatever we transferred there credited will be debited here. Now, even for these units, we will get some scrap value. Yes, sir. So record. By cost ledger control account is nothing but the scrap value. Scrap value of what? Abnormal loss. See, in the exam, if they have just given scrap value, take it for both normal loss units as well as abnormal loss units. Whereas, if they have given it separately, for normal loss separate scrap value, for abnormal loss separate scrap value, please take it accordingly. Clear? Yes. And whatever is the net loss, this will be the balancing figure. Transfer it to where? Costing P&L account. Costing P&L account. Guys, one difference between both the losses, listen here. Here what I transferred to normal loss account is not the cost of normal loss units. It is the scrap value of the normal loss units. Whereas whatever I am transferring here to abnormal loss account, it is the cost of abnormal loss units. Clear? Will I record the scrap value of abnormal loss units in the process account? No. Where do I record it? In abnormal loss account. In abnormal loss account. Hope you understand. Yes, sir. Next, sir, if not abnormal loss, I can get abnormal gain. Abnormal gain is what? Guys, listen. Logically, you learn. Simple. Listen here. Sir, I expected 100 units will be normal loss. This I would have expected at the beginning of the year or at the end of the year? Beginning of the year. I would have already recorded this at the beginning of the year. I have recorded the scrap value, assume 5 rupees per unit, 500. Already I have recorded. Yes. But the end of the year, I got to know. Actually, loss is not 100 units. It is only 80 units. That means 20 is what? Abnormal gain. Now, what is abnormal gain, sir? I expected it to be loss, but it turned out to be good. Sir, I expected 50 marks, passing marks in my costing paper, but I got 60. Gain of 10 marks. Abnormal gain. They will not do any charity. Only if you are written, they will give marks. Okay, don't assume that. Sir, if I write for 50, they will give 60. Definitely not. Okay. So I repeat, listen. You expected 50 in a paper, but you ended up getting 60. 10 rupees is gain. Sorry, 10 marks is there. Gain. Clear? Yes. Same way. I expected my normal loss to be 100 units. But the end of the year, Jamuna, at the end of the year, I got to know there is actual loss of only 80. That means 20, which I expected to be loss, turned out to be good. But I would have already recorded this, guys. 100 I would have already booked. Now, can I go and cancel that? No. So, what do you do now? Go and record 20 years. Go ahead and record 20 years. Now, how do I calculate the value of abnormal gain, sir? Same like abnormal loss. Same like abnormal loss. Whatever cost per unit you would have got into the number of abnormal gain units. Clear? So, whatever I will transfer here, I will receive it there. I will receive it there. Where, sir? Abnormal gain account. You can see here. Whatever I have debited in process account, we will credit it here. We will credit it here. Guys, one important thing now. How many normal loss I observed? I estimated 100. But actually normal loss is how much now? Only 80. Guys, listen. For normal loss, I would have already accounted scrap value per unit 5 rupees. 500 I already accounted. But will I get now 500? Will I get 500? No, I will get only on 80 units. That means on 20 units, I lost scrap value. I will record. See, this is my actual gain. Where is it? It is my gain. But out of this gain, I am losing some small value. What is it, sir? For this 20 units, I am losing scrap value. Record it here. Guys, whatever I am writing here, to normal loss, it is nothing but loss of scrap value. Why, sir? Because I already recorded the scrap value on the credit side for how many units? 100 units. I expected that I will get scrap value for 100 units and I reduced 500 from my cost. But only at the end of the year I got to know actual loss is only 80. That means on 20 units I will be losing the scrap value. Yes, please record it here. Please record it here. Clear? That is 20 units. 20 into 5 will come here. Remaining is the net gain, which we will transfer it to costing P&L account. This is the net gain. This is the net gain. Hope you understood. Clear? Yes. Sure. Let us read it. Abnormal gain. Guys, listen here. Input was 1000. I expected 10% as loss. So normal output was 900. That is normal loss is 100. But actually my output turned out to be 950. My normal output was what? 900. So that means remaining 50 is what, sir? Abnormal gain. Or else, let me take like this. What is my total loss? Only 50. Only 50. Whereas my normal loss is 100. When total loss is less than normal loss, what is the difference called as? Abnormal gain. Abnormal gain. Okay, sir. Sometimes loss under a process is less than the anticipated normal figure. In other words, the actual production exceeds the expected figures. Under such a situation, the difference between actual and expected loss or actual and expected production is known as abnormal gain or abnormal yield. So abnormal gain may be defined as unexpected gain in production under the normal conditions. Means that's simple. Sir, I expected 100 would be a loss, but actually I ended up getting only 80 loss. That means 20 which I expected to be loss turned out to be good units. Turned out to be good units means, can I sell it in the market, sir, at a usual selling price? Yes. How do we calculate the value of abnormal gain? Same formula, guys. First calculate cost per unit. Multiply it with abnormal gain units. Now you might ask me, sir, when you are reducing your normal loss units, will you reduce only 50 or full 100, sir? 100, guys. Because all these calculations would have been done at the beginning of the year only. Normal loss you would have expected at the beginning itself, percentage. Clear? Yes. Even scrap value I would have taken for 50 units or 100 units, sir. 100 units. Clear? Yes, sir. Into abnormal gain units, which is 50 for me. Clear? So once you give debit in the process account, bring it here and please be careful with this. Many students might miss this. And even if they're doing, they may not know the reason why is it. Yeah, so simple, guys. This is a loss of scrap value. Loss of scrap value. So can we lose scrap value also? Yes, we have gained something big, guys, in life. Clear? We have lost something small. Let us leave it. Let us leave it. Correct now, guys, because this abnormal gain 50 units is there. No, I can sell it in the market at a regular price. For that, we are losing some small scrap value. Let us let go. Correct now. That is what the story of even CA students. Okay, you guys are making yourself for a better future. In this journey, if there are some small sacrifices which we have to do, you have to do it, guys. Clear? Now, you might see some of your friends, especially those who have completed their degree. You might be seeing your friends working, earning some income and all. Okay, but don't worry. Don't compare your present to today with their life or with their happiness. You guys are aiming something big in your life. It's okay to sacrifice few things, hold your nerve, control your emotions, control your desires, and focus on your studies. Okay, definitely you will have better future. That is what I can tell. Don't compare with others, guys. That's the best thing. If at all, if you want to compare, always compare with someone who is above you, not below you. Above you in terms of knowledge and qualification and talent. Yeah, yes. Sure, sir. Fine, sir. Again coming back to format. Again coming back to format. Yes. Hope you understood whatever I have explained it. Clear? Guys, follow the order. Follow the order. Let me tell the order. First, record all the expenses, people. Abnormal gain will not come at the beginning. It will come only at the end. First, record all the expenses. Okay, sir. Then units column. You open inputs. Then normal loss will be normally given in percentage. That percentage has to be applied on input. Okay. Then output and all normally units will be given, guys. Clear? So first, to try to close units column. Check which side is more. Majority of the time, debit side might be more, but may not be always. Check which side is more. If debit side is more, then on the credit side, abnormal loss. If credit side is more, on the debit side, abnormal gain. So in the units column, always the balancing figure would be either abnormal loss or abnormal gain. Once units column is closed, you need to find out maybe two figures at least. Clear? Calculate one figure using the formula that is like this. Another one you can keep it as balancing figure. Or else you can find out this also using the formula. If you just multiply with the number of units of output transferred to next process, you will get this line. Clear? Yes. If closing stock is given, you can record that also. Clear? Yes. Sure. I have also given what it would be debited, credited, and all individually, one by one item. So we have covered some basics about the process costing. Let me also explain it through an example. I already give one or two examples, but still I am taking one more here. I will also take up one question and tell you, don't worry. First, raw material 10,000 is introduced into the production process at a cost of how much? 10 rupees per unit. So total cost is 1 lakh. Direct wages 10,000, production overhead 15,000. So what is my total cost? 1 lakh 25,000. Everything would be debited here, sir. Hello, sir. Everything would be debited here. Yes. Next, actual output transfer to next process is only 9,200. Output is 9,200. That is this figure. Units. Okay, sir. Then normal loss 5%. 5% on what? 10,000. 10,000, which comes to how much, sir? 500. 500. So normal output is how much, guys? 10,000 minus 500. How much it should is of it was supposed to be? 9,500. But actually output is how much, sir? 9,200. That means remaining 300 is what, sir? Abnormal loss. Abnormal loss. That would be the balancing figure in the normally units column. Okay. Sure. Now let us come to the cost part. Sir, total cost is 1,25,000. We have a normal loss of 500 units. We are getting a scrap value of 3 rupees for each unit. So what is the scrap value? It is 500 into 3, which is 1,500. What is my net cost, sir? 123,500, which is nothing but the numerator part. Total cost minus scrap value of normal loss units. So you will get 123,500 divided by normal output. What is normal output, sir? 10,000 minus 5% loss, which is 9,500. Divide each other. What do you get? Cost per unit. Cost per unit, 13 rupees. Now, if I want to calculate value of abnormal gain, 13 into 300, which comes to 3,900. I want to calculate cost of output, 13 into 9,200. 9,200. Hope you got it. Clear? Same thing, whatever I have calculated here, now we need to present. So 1 lakh cost. Okay, let me do it. I need to present it. How much is the units? 10,000. Okay. What is the cost of that? 1 lakh. Wages cost 10, 15. Okay. 10,000, 15,000. For this and all units will not come, people. Normal loss is 500. What is the scrap value? Into 3,500. So if I ask you what is the net cost? Debit minus credit. Debit minus credit. Okay. Then we have abnormal loss 3,900. 3,900. What is the unit, sir? 300. Pros output is how much, sir? 9,200. Normally, this would be the balancing figure. So, total of 10,000, 10,000. Until I find out abnormal loss, there will be zero here. You find it out as balancing figure. Now, output cost is how much? 119,600. 119,600. Hope you understood. Now bring that here. 300 into the cost of it is 3,900. For this also, do we get a scrap value? Yes. If they are not given separately, take same 3 rupees. So 300 into 3, 900. Clear? Remaining is how much, sir? 3,000. Transfer it to costing candle. What is this, sir? Net loss. Net loss. Clear? And if you prepare normal loss account also same, guys. Listen here. If you prepare normal loss, once again I will show you. On the debit side, you will take how much in units? 500. 1,500. Then on the credit side, by cost ledger control account, how much, sir? Same. 500, 1,500. Match. That's all. This is normal loss account. normal loss account. Debit side, you receive whatever is transferred here, no? You receive it here. Clear? This was with an anticipation you have booked. When you receive it, you will pass this entry. When you actually receive the scrap. Clear? Guys, when I pass this entry, I have not yet received the amount. It was just with an anticipation. When did I pass this entry? At the beginning of the year. When I actually receive it, you need to receive the amount. What would be the entry? By cost ledger control account to normal loss account. Got it? Yes, sir. Sure. One second. I will just show you a question which I have solved in my regular class. Oh, you can see your guys. All the data is given. We will not go in detail about the data and all. So you can see one by one. First material, wages, overheads, every expenses we will take. Okay, sir. Every expenses we will take. On the credit side, we will first record the normal loss. How much is that? 5% of input. Take it. Then scrap value they have given 12.5. 375 into 12.5. You will get scrap value of normal loss units. Now, if I ask you what is the cost, it is the total of debit side 6,94,350 minus 4,688 divided by units 7,500 minus 375. You will get cost per unit. Now, first let us close the units column. Output they would have given 7050. Total of debit side 7,500, credit side not matching, sir. So, what is the balancing figure? 75. So, multiply 75 here. You will get cost of abnormal loss. Take it here. And now close amount column. Debit side is more, balancing figure on the credit side is cost of output. Sir, can I calculate this using the formula also? Yes. Instead of 75, if you bring 7050 here, you will get cost of output. But I would suggest you to keep it as balancing figure so that amounts column will exactly match as. Amounts column will exactly match. Especially if you have got something decimal here, then it may lead to some difference. So in order to avoid that difference, better keep it as the balancing figure under the amount column. Under the amount column. Okay. So abnormal loss you can see whatever I have transferred here, I will receive it first. I will receive it first. Then we will receive the scrap value for abnormal loss units. Then remaining we will transfer it to costing P&L account, which I call it as net loss. Net loss. Guys, please don't straight away transfer from here only to costing P&L account because here we don't record the scrap value of abnormal loss accounts or loss units. Clear? So please transfer it to abnormal loss. There you record scrap value and from there you transfer it to costing P&L. Sir, what if there is abnormal gain? Okay, in this account there is an abnormal gain. Okay, guys, when there is an abnormal gain, you have to be extra careful. First, record all the expenses, inputs, then also output. Normal loss, how much is that, sir? 10% of input 7050 into 10%. Okay, record the scrap value also, which is 37.5 into 705. Okay, game over. Now, first we need to close units column. Check which side is more. Don't always conclude that debit side would be more. Sir, this time credit side is more, sir. 7250 and on the debit side only 7050. So what is the difference, sir? Balancing figure of normal gain on the debit side. Clear? And once you close the units column, now we need to calculate cost per unit. Now, first total of the cost debit side, but don't write it here. Don't write it here because we will get this value also. Do the total, but don't write it in the total. Just take it here. Whatever total you get here, just to take it here, guys. So total cost. Please be careful. Total cost will not include this. We have not yet determined this. Only this will come. Minus scrap value divided by input minus normal loss units. You will get cost per unit. Multiply with abnormal loss units. You will get value of abnormal loss. Sorry, abnormal gain. Multiply with abnormal gain units, you will get value of abnormal gain. Now, whatever value you have got here, add this and write the total. Clear, guys? One mistake students might do is, whatever total they get here, they will immediately write. Don't do that. When there is abnormal gain, wait, guys. Wait for the value of abnormal gain because that will also come on the debit side. Clear? Or if at all, if you want to write the total, you can write this total provided you have got this. If not, you would have still have to determine this. Clear? Yes. Once I get that debit side total, you can take the cost of output transfer to next process as balancing figure. Or else you can calculate this also using the formula. So instead of 180, if you take 6525, you will get the cost of output. You will get the cost of output. Hope you understand. And when there is abnormal gain, observe. Sir, first receive it. 180 units at 25209. Receive it on the credit side. Because there it is debited, here it would be credited. Now, for 180 units, will I get a scrap value? No, it is a loss. So for 180 units, 37.5 I am losing. So it is like a loss size. It is like a loss. So record it. Remaining whatever is there is called net gain. Transfer it to costing P&L. Transfer it to costing P&L account. This is nothing but loss of normal scrap. Clear? Yes. Sure. Let us now enter the new concept here. Inter-process profits. Guys, as we already learned, sir, the output of one process will be sent to the next process. Same way, output of process 2 will be sent to process 3 at cost. But now company want to know what is the performance of each process. Who is contributing better? Who is adding more profit to the company? In that case, they will not transfer the output of process 1 to process 2 at cost. They will ask you to add some profit and transfer it at what price, sir? Transfer price. But please be careful. Process 2 will not know how much profit is added by process 1. Same way, process 3 will not know how much profit is added by 1 and 2. Got it? This would be kept as confidential by the top level manager. They will just tell process 1, whatever work you are doing, you transfer it to process 2 at this much price. Same way, whatever work process 2 you are doing, you transfer to process 3 at this much price. This price is normally fixed by top level management. Yes. Doing the industry research and all means simple. How do they fix it, guys? Simple. If process 1 output is sold in the market, at what price can we sell it? We are not selling it. If I sell it, then we will fix that as transfer price. Same way, whatever work process 2 is doing, if I sell it in the open market, at what price can I sell it? We will fix that as transfer price. Yeah. Sir, what is the main reason behind it? Simple. To evaluate the performance of each process. To evaluate the performance of each process. Now assume guys, company got to know process 2 is not performing better. They are incurring huge cost. They are taking too much time. In that case, what company can plan is they can give 1 or 2 warning for them. If not, eliminate process 2 and try to outsource that work to others. Whatever process 2 is doing in-house, try to eliminate it and outsource that work to maybe the outside agency. Why, sir? Because assume guys, if process 2 is doing in-house work, they are incurring 10 lakh costs. Now there is one person who is ready to do the same work for me for 7 lakh. I can save 3 lakh, no? Yes. But obviously there are other qualitative factors to consider. I have to share some secrets with him and all. Now what if he himself starts the business which is competitive for me? That and all we need to consider. But if everything is okay, maybe I can outsource this work to outsiders. So that is why companies normally transfer the output of one process to another process, not at cost, but at profit, by adding a profit, which we call it as transfer price. Transfer price. But one problem here is, guys, whatever process 1 sent to process 2 to process 3. Now, process 1 doesn't have any problem. Why? Because there is no one adding profit to them. But when it comes to process 2 and process 3, they will be having a material which is sent by 1 and 3 will be having which is sent by 2. Correct. Now, if they have already completed the work and send it to next process or sold it, no problem. But what if they are having it as closing stock? Now assume guys, process 3 is having a closing stock. Closing stock, can it be shown at profit? No. But here, closing stock is not at cost. Why, sir? Because process 1 and process 2 would have added some profit. Can I show my inventory at cost or at profit? Cost. Correct? Even accounting standard or Ind AS 2 tells the same. You value it at lower of cost or net realizable value. If your selling price is more than cost, then you will always show the inventory at cost. Now, can I show my inventory which is there in process 2 or process 3 at cost plus profit? No. I have to show it at cost. But my closing stock will have some profit which is added by previous processes, which we call it as unrealized profit. What should we do with this, sir? Create a reserve and remove it. Create a reserve and remove it. Why so? Because we cannot make profit by keeping the goods with us only. Can we do it? Will accounting standard allow recognizing the profit by keeping the goods with you only? No. So now closing stock of process 3 will have some element of profit which is added by 1 and 2. Can we have that in our books? No. Please try to remove it. Please try to remove it. Hope you understand. By creating a reserve. Yes. That is what we are learning now. Inter-process profits. Normally, the output of one process is transferred to another process at cost, but sometimes at a price showing a profit to the transfer process. The to the transfer process means to the receiver. Okay, the transferer will add some profit and send it to the receiver. The transfer price may be made at a price corresponding to the current wholesale market price. That is, if I sell it in the market, what price can I get? We are not selling it, but if I sell, what is that I will be getting? Or at a cost plus some agreed percentage of profit. That is cost plus some certain percentage of profit. The advantage of the method is to find out whether the particular process is making profit or loss. So we can calculate each process. Is it making profit or loss? If yes, how much? This will help the management whether to process the product or to buy the product from the market. Guys, we will make this decision in marginal costing. Make or buy decisions. Make or buy decision. Sir, should I continue with this process in-house or should I stop it and start purchasing it from outside? So transfer price is nothing but cost plus profit, guys. Don't call it a selling price. We are not selling it. Clear? If it is for outsider, we call this a selling price. But here we are not selling it. We are sending it to the next process. The profits introduced remain a part of the prices of process stocks, finished stocks, and work in progress. The balance sheet cannot show the stock with profit, guys, because the accounting standards will not allow it. This problem arises only in respect of stock on and at the end of the period. That is only on the closing stock. So what about the units completed and transferred to next process? Guys, this goods, if I had already sold it, then I would have recognized profit on it. There is no problem in it. So for the goods sold, we don't care. But for the goods which are still lying with us, we cannot show that goods along with profit. We have to show it at cost. The unrealized profit in the closing stock is eliminated by creating a stock reserve. By creating a stock reserve. I will try to explain this with an example with a question, guys. See, whenever you are preparing the process accounts, which includes the inter-process profits, you should have three amount column on the both sides. Cost profit total on both the sides. Clear? Guys, think like this. This is the cost to the company as a whole. Whereas this is for the process. Will process know what is the profit added by the previous process? No, they will not know. But will top level management know it? Yes. So for the company, if I ask you what is cost, it is this. For the process, if I ask you what is the cost, for them, Papa, they will believe that this is their cost. Clear? So cost column stands for company, whereas total column stands for the process. Got it? Yes. Process 1 normally will not have any profits, guys, because no one is there before them to add. Let us go to process 2 to understand better. Yeah. So, opening stock value they had given 9,000. Clear? In that, how much is the profit they would have given? This I would have anyway recognized it during the period because normally opening stock I would have sold during the period. Because this was the closing stock for the last year, this I would have sold it. We will take care of. Then this is what we have received from process 1. Now for process 2, what is cost price? Is it 4,500 or 54? 54. 54 because they don't know what profit added by process 1 and 1. But for the same goods, what is the cost to the company? 4,500. 4,500. Only top level management will know this figure. Clear? I repeat. For process 2, the cost is 54,000. Whereas for the same goods, what is the cost to the company? 4,500. Okay. Then we got prime cost and all here. Then closing stock, normally they will give this value, 4,500, which includes profit. Sir, how will I find out the profit element? Simple. You can either find out cost element or profit element. Either one you calculate. How is this, sir? Simple. Let us calculate cost. 4,500 is a part of 90. How much is for 70? So simple. 4,500 divided by 90 into 75,000. You will get what is the cost. In that case, you can keep profit as balancing figure. Or else, can I calculate the profit amount, sir? Yes. How is it? 4,500 divided by 90,000 into 15,000. Into 15,000. You get profit. You either calculate cost or profit. Keep the other one as balancing figure. You can see I have shown it here also. Cost element I have calculated. Cost of closing stock. Clear, huh? Yes. So simple. I repeat once again. This divided by this into 75,000. That will give you the cost of closing stock. Or else if you want to calculate the profit in closing stock, then 4,500 divided by 90,000 into 50,000. 50,000. Okay. Then we have added overhead cost also. Then we will get a total cost 90,000. Now on 90,000, process 2 has to add a profit. Normally, if they have given it as a percentage and all, will you add it on 75, 750 or 90? 90. Because what is the cost for process 2? 90. For that, you add profit and send it to next process. So next process story is what? Sir, 75,750 worth of goods is sent to next process at 1,12,500 by adding a profit of 36,750. So when finished stock receive the goods, for them what is the cost? 1,12,500. 1,12,500. Okay, sir. This is the profit and the profit percentage and profit amount calculations. Finish stock. Oh, guys, if I have to then see this, you will do only if they have asked in the question reconciliation of profit. So inter-process profit added you have to take. What is the inter-process profits, sir? One by one we will see. 13,500, 22,500, and here 16,250. Clear, we will take it. But is it realized profit? No, because some of them still might be lying in closing stock. So what should we do? Add unrealized profit in opening stock. Why are you adding it, sir? Simple. Opening stock. Would I have been served it in the current period? Yes. I would have recognized profit on it. Yes. And this is the profit added in the current period or last period? Last period. Clear? Because this was the closing stock for last period. I would have deducted in the current period. I am adding it. Same way, closing stock. On closing stock, is profit added in the current period? Yes. Is it a part of this? Yes. But have I sold it? No. That means, is it realized or unrealized profit? Unrealized. Deduct. Deducted. You will get what is the realized profit from each process. If I ask you who is performing better, process. Clear. Company has totally earned a profit of how much? 57,575. How much is contributed by each process? Each process. Got it. So this is what the total profit made by the company. You can see here. Total profit. So if I ask you the breakup, how much each is contributed by processors, we will get it here. Yeah. If they ask you, show the value of closing stock to be appearing in the balance sheet. Guys, whatever process 1, process 2 and finished stock, closing stock is there. Closing balance. Is it a closing asset of a company, of an entity? Yes, inventory. They have to show it as a current asset in the balance sheet. At what value? Cost. So we need to take what values, sir? Closing stock 3,700, 3,750, and here 757. So this is the value of closing stock in the balance sheet of the company. Cost of closing stock. Hope you understand. Yeah, this and all only if they ask you to it. Yeah, normally they may ask only the process accounts. You will stop it there. Got it? This is all about the inter-process profits. Yes, we'll continue. There is some more topics to be covered. Next is valuation of work in progress. That is, if there is work in progress, then how do we value it? Important for this chapter, guys. So first of all, what is work in progress? Partly finished goods. Partly finished goods. Guys, if there is any units on which I started manufacturing but not completed. Because see, by the end of the year, that is 31st March, can every unit be completed and be ready for sale? No. So there can be few units on which I have started working but not yet completed. But not yet completed. What do we call it as? Work in progress. Even in cost sheet format and all we saw. Opening WAP means we will add, closing WAP means we will deduct it. But there the values was already given. In this chapter, we are understanding, we are learning how to determine that value. How to determine that value. Guys, for work in progress, we should always calculate equivalent units. What is equivalent units, sir? Guys, assume there is a 1000 units of closing work in progress on which we have done 60% work. What is the number of equivalent units? 600. Sir, what is the meaning of it? Means if 100% work is done, how many units I would have completed? 600. I'm not done. This is just for calculation. Equivalent units is only for calculation purposes. Clear? See, there are 5,000 units which is completed. Clear? Now I have to compare that with 1000. Sir, is the base same? No. 5,000 100% complete, whereas 1000 is not 100% complete. If this 1000 100% complete means how much I would have got? 600. Now can I add 500 with 600 with 5,000? Yes. Now assume my total cost is 10 lakh. 10 lakh. 10 lakh divided by 5,600. What do I get? Cost per equivalent unit. Cost per equivalent unit. Hope you understand. Clear. To calculate cost per unit, I cannot simply add up both of this and take 6,000 as denominator. Why is that? They both are not for same level of work. Same level of work. So in order to calculate cost per unit, I need to have equivalent units, which is equal in terms of work completed. So 5,000 100% work done, whereas 1,000 knows. But if 100% work done, how much I would have completed, sir? 600 completed units. Now I can add up both and take it as a denominator to calculate what? Cost per unit. So you can see equivalent units I have given. Equivalent production means converting the incomplete production units into equivalent number of completed units. Guys, it is just a notional calculation. Sir, does it mean that 600 units are completed? Can we go and sell it in the market? No, no, no. I am not selling it in the market. This is only for calculation purpose. The term equivalent unit means a notional quantity of completed units substituted for an actual quantity of incomplete physical units. What is the incomplete actual physical units? 1,000. If I convert that into equivalent number of units, this is notional. This is notional. Incomplete physical units in progress. Sir, how do I get it? Simple. Equivalent units of work in progress is equal to actual number of units in progress into percentage of work completed in that period. That is also important, guys. Listen here. Now assume there is an opening WAP of 100 units on which 40% work is done, and there is closing WAP of 500 units on which 75% work is done. You tell me on this how much work is done in the current period? How much work is done in the current period? 60%. Why, sir? 40% was already done last year. Remaining we will complete. Will we start again from zero? No. Whatever is remaining, we will do it first. So 60% is the work done in the current period. So if I ask you what is the equivalent unit, it would be 60 here in the current period. Current period. Whereas on closing WAP, how much work I have done? 75%. When I have done this? Current period. So what is the equivalent unit? 500 into 75%. 375. Got it? Hope you understand. So, for opening WIP, should we take work completed or work remaining? Work remaining. For closing WIP, we need to take work completed or remaining? Complete. That is in simple. Whatever we have done in the current period. Whatever we have done in the current period, guys. Oh. So accounting procedure. Whenever there is a work in progress, sir, what is the accounting procedure? Step 1. Prepare statement of equivalent production. Step 2, prepare statement of cost per equivalent unit. Then prepare statement of evaluation at the end. Prepare process account as usual. Okay. Sure. Format for equivalent production guys. Statement of equivalent production. First take inputs. Input opening WAP will be there plus unit introduced during the current period. Means how many units are introduced into the manufacturing process. Then you try to tally that with output. We'll come to this part later. First we will try to tally with output. Units completed you take. That is nothing but output transfer to next process. Then normal loss. Normally will be given as a percentage. And guys, here when they give percentage, you need to take it on both most of the time. If they clearly give only 10% on unit introduced, you will take only on this. They will tell 10% on both, including opening WAP. Then you have to take on both 10%. Clear? Yes, we took it, sir. Then closing WAP, they will be given in the question. Now try to tally this. It won't be matching. The balancing figure would be abnormal loss. Clear? Sir, what if by chance if output only is more? Then the difference is abnormal gain. You need to deduct it. If there is abnormal gain, you have to show it as a negative loss. Clear? First you do this. Try to tally the output with input. Here normally the abnormal loss would be the balancing figure. Clear? Or else if output only is more, then you will have abnormal gain loss. Hope you got it. Clear? Once I ensure that yes, these both are equal, sir, then I will proceed further. Clear? And if there is abnormal gain, first total up, this will be more. Maybe here you will show abnormal gain, how much ever is there. Clear? Then you will get one more number. Try to match that with this. Clear? Yes. If it is abnormal loss, you can show it here only as positive. As positive. Any doubt, madam? Got it now? Yes. Sure. Once I am done with this two, I will proceed further to calculate equivalent units. Equivalent units for 100 units completed, it will be always 100% percentage of work done. So we will get same units. Same units. It also depends on the methods, which I will explain later. Then for normal loss, we never take units. Why is that? Simple guys. We are calculating the units to calculate the cost. So while calculating the cost, will we value the normal loss units separately? No. Whatever is the cost of normal loss will be absorbed by good units. So automatically whatever is the remaining units, the cost of which will become more. So we will not take anything in the units column here for normal loss. Whereas for abnormal loss, take whatever percentage they have given as percentage completion work. That is the degree of completion. If nothing is given, consider 100%. Consider 100%. Then closing WAP, they would have given it accordingly. Take it. Clear. And with respect to degree of completion, sometimes they may give for labor and overhead same percentage. In that case, you can club both and write one column, labor and overhead. If they have given it separately, please show separately like this. No, sir, they have given same percentages. Then in that case, you can club and write under 1, under 180. Oh. Now we got equivalent units for material, labor and overhead. Take it to the next calculation. Statement of cost per equivalent unit we are calculating. What do we do? Take each of the material, labor, overhead cost. And if at all, if there is any scrap, value of normal loss units, reduce it from material cost. For this normal loss units, if you are getting any scrap value, reduce it from where? Material cost. Take the net. That is material cost minus scrap value of normal loss units, remaining you take. Okay, sir. Then take labor and overhead cost also. Then whatever equivalent units you have got here, consider here. Divide each other. Cost by equivalent units. What do you get, sir? Cost per equivalent units. Clear? Here if you do, you will get total cost per equivalent units. This is element wise. Material, labor, overhead. If you total up, you will get cost per equivalent unit. Using this, we will calculate the cost of output, closing WAP and abnormal loss, for which we need to prepare something called as statement of evaluation. We need to prepare statement of evaluation to calculate what and all, sir? Value of abnormal loss, value of closing WAP and value of output transferred to next process. For that, what values will we take it, sir? Cost per equivalent unit. I have given some notes here. For normal loss, no equivalent unit is calculated. As normal loss unit is observed, whatever is the cost of normal loss units are there is observed by whom? Good units. Good units is nothing but now here. This units, guys. Remaining units. Then, if degree of completion for abnormal loss unit is not given, you will take 100%. Same way for abnormal gain, you will take the degree of completion as 100%. But please be careful, if it is abnormal gain, you have to show it as a reduction here, whatever is the units. Okay. If the degree of completion for opening WAP is given in the question, then you are supposed to follow FIFO method. Sir, what if degree of completion for opening WAP is not given in the question? Then you will follow weighted average. Yeah, see, normally in the question, they would ask you to follow the respective method. But they have not mentioned the method, but they have asked you to do statement of equivalent production, statement of cost, statement of evaluation. Sir, how do I do it? Check for opening WAP. Have they given the degree of completion? Degree of completion means how much work is done. If it is given, you can follow FIFO method. Sir, no, sir, opening WAP, degree of completion is not given. Then you have to follow weighted average method, guys. Now, to prepare all this, we have two methods available. What are those, sir? FIFO method and weighted average method. I have given it here theoretically, but let me explain it through the numbers. That would be better. Yes. Let us learn from this. Yes, pay attention. Look here. We will go step by step. First one, statement of equivalent production. Chetan, look at me. Look at me, man. No. Chalo. Opening WAP, 3000 is there. Sir, have they given the degree of completion for opening WAP? No, only cost they have given. That means which method can I follow? Weighted average. Weighted average. Okay, let us follow weighted average. Then unit increase during the current period, how much? 42,000. So totally we have an input of 45,000. Now they are given the data. Units completed and transferred to next process, which is nothing but output, is how much? 36,000. Then normal loss, they have told 4%. 4% of what? Both. So 45,000 into 4%, 1,800. Then closing WAP also they have given 4,200. They would have given it in the question. Okay. Then abnormal loss is not given. Find it out as balancing figure. 45. But if you do here, you will be getting 40. So try to match it by keeping abnormal loss balancing figure 3,000. Now both are matching, sir? Yes. Go ahead. Once we are done with this, tick. Next part. Equivalent production. I am doing it for material separately, labor and overhead together. Why, sir? Because for labor and overhead, they have given the same percentages. Now, under weighted average method, hello, under weighted average method, we need to take 100% for work completed and transferred to next process. How much is from opening WAP and all, we don't care. Okay. So 100%, 100% we will take. Then for normal loss, we don't take anything in the units column. Please be careful with this. Oh, then abnormal loss, they would have given. Yeah, they have given here. Accordingly, take it. If nothing is given, you can consider 100, 100. Clear? Then for closing WAP also, they would have given. How much, sir? 150. Okay. So 100 here, 50 here. Take it. So we got equivalent units. Which method we are following? Weighted average. Very good. Now, statement of cost. Statement of cost, we need to take total cost, guys. Total cost means cost of opening WAP plus current period cost. What is the cost of opening WAP? They have given you. Plus current period cost, they have given here. Add up everything. Add up everything. And from material cost, we need to deduct one thing. What is it? Scrap value of normal loss units. This one. You can observe. I am reducing it from current period material cost. Clear? So we took cost of opening WAP as well as current period cost. Guys, one thing you should know. This is the cost incurred in the current period or last period? Last period. But under weighted average method, we don't have any separate treatment. Cost is cost. Just take it and calculate weighted average price. Just calculate weighted average price. Okay. So once you get total cost, how did you get total cost? Cost of opening WAP plus current period cost. Okay. Divided by equivalent units. Equivalent units. You get cost per equivalent units. I call it as weighted average price. I call it as weighted average price. For material, labor and overhead we have got. Per unit how much? 136. Using this, we can prepare statement of evaluation. Statement of evaluation. Okay. Cost of output is how much? 36,000 units into per unit straight away take 137. Multiply. Oh, we got it. For abnormal loss, please be careful. 3000 is actual units. But for calculation, you need to take equivalent units. Because whatever cost we have calculated here is for actual units or equivalent unit. Equivalent unit. So for material, how much, sir? And sorry, 3000. For labor and overhead, how much, sir? 2100. Multiply with respective cost. 3000 into 85 for material. For labor, 2100 into 12. For overhead, 2100 into 40. Clear? What did I take here is not actual units, equivalent units. Why is the simple logic? This is the cost per equivalent unit. Okay. Then coming to closing WAP, actual units is 4200. But I need to take equivalent units here. What is the equivalent units, sir? 4200, 2100. Multiply it with the respective cost. 4200 into 85, 2100 into 12, 2100 into 1. Clear. Guys, here my intention is not to solve the question. I am explaining you how to apply the concept. Clear? Yes. Because if you know the concept, if you know how to apply it, sir, that is more important for you now. Clear? Solving questions we will take care. That is separate. Clear? Just sure. Now we got the closing WAP cost. Add up everything. Guys, under weighted average method, this figure has to match with this figure. The total year has to match with the total year. There should not be any difference. Clear? And if by chance if you have got any of this as decimal, maybe some minor difference you get, you better set it up here. As the last amount, you just set it up. This will be only if you are getting this as decimals. Clear? Hope you understood. Which method did we solve, guys? Weighted average. Under weighted average, what work we did when and all we don't care. Sir, in the current year, we have completed this many units, just transfer it. And we take total cost here. When we have incurred it, we are not bothered. Here, same question. Now let us solve under FIFO. Under FIFO. Now they have given the degree of completion for opening WAP. Material 100% expense, labor and overhead 50% expense. Pay attention. Sir, input is same story. Output. How much is the output? Transfer to next process 36,000. But there you give a breakup. How much is from opening WAP? 3,000. Remaining is how much, guys? 33 is out of current year introduction. You know, under FIFO, they are only bothered about what did I do this year? What I have done this year. What I have done last year is for last year. What I will do for this year is for this year. Clear? Now, as soon as I begin the show in the current year, first I will complete the incomplete units and sell it. Remaining only I will produce from here. So totally my output is 36,000. Out of that 3,000 is from here, remaining 33 is from here. Hope you understood. Okay. On this 3,000, am I doing 100% work now? No. Sir, with respect to material, already everything is done. So 0% work. With respect to labor and overhead, 50% is already done. What is remaining? Another 50%. Another 50%. So we need to take only that. Hope you're understanding. See, sir, what if this was 40%? Should I take 40 or 60 here? 60. Remaining work. Remaining work. Oh. Then out of current period introduction, how much I have produced out of this? 33. When did I start working on this? Current period. When did I complete? Current period. That means 100% work I have. 100% work I have done in the current period itself. So what is the equivalent unit? 33, 30. Rest all will remain same as. Rest all remains same. Only difference is this part. Hope you understand. Under weighted average, what we did? We simply took 36,000 into 100%. Into 100%. Correct? That's all. Weighted average. We never bothered about what did we do exactly in this year, how much we had done last year. No. We didn't. Clear? Okay. So under FIFO, we only considered what is the work we have done in the current period. So we got the equivalent units this much. Same way, even when it comes to cost, should I take total cost or only current period cost? Only current period cost. Sir, what is the logic? Guys, simple. While calculating the equivalent units, did we consider only the work done in the current period or full? Only the work done in the current period. Same way. Here we need to take only the current period cost. Divide it by equivalent units. Here also scrap value and all you have to reduce, which is same. So we will take only current period cost. Divided by equivalent units. What do you get? Cost per equivalent unit. Is it for the current period or weighted average? Current period. So simple guys. Current period cost divided by current period work. You will get cost per equivalent unit in the current period. In the current period. Now coming to statement of evaluation. Here it is important. Sir, here I need to transfer the output to next process. No, sir. There, should I take 36,000 units or only 33? How many units I am transferring to next process? 36,000. So take fully. So out of 36, how much is out of opening WA? 3,000. On that, we already incurred some cost in the past year. Take that. This is the cost of opening WA. Clear? Which I used to take here, na? Under weighted average method. Whereas under FIFO, we are taking it separately. Okay. So what is this, sir? Simple. Cost of opening WAP, which was incurred in the last year. For that, we need to add on opening WAP, how much cost is incurred in the current period. Sir, how do you get it? What is the equivalent units for opening WAP? Material 0. For labor and overhead, 1,500. So take 1,500 for labor and overhead, multiply it with the cost per equivalent unit. So you will get 76,275. Guys, someone. This is the cost which was incurred on opening WAP in the last period. To complete how much work? 50% work. Sorry, 50%. 100% with respect to material and for labor and overhead, 50%. Now, remaining work is done in the current period for which we have incurred cost of how much? 76,275. Now, what is the total cost of 3,000 units? 379, 175. What is the total output? 36. We have only got 3,000 cost. Remaining 33 is completely done in the current period. So 33,000 into what is the cost per equivalent unit? Total I will take 137.7. 137.7. Now, if I ask you what is the cost of 36,000 output which is transferred to next process, this figure is clear. Then abnormal loss and WAP will remain same. And here, if you do total, this total will not match exactly with this. The difference is nothing but this figure. Clear? The difference between this and this is exactly equal to this. Got it? Yes. Hope you understood. Because simple. I considered this figure in this calculation, but I didn't consider it here. That is why that difference. Under weighted average, exactly it will match. Whereas under FIFO, the difference would be the cost of opening WAP incurred in the last year. Clear? Let me summarize that. Let me summarize only this, not the entire chapter. Till now, I'm doing that only. Under FIFO, I'm only bothered about what did I do in the current period. What work did I complete in the current period? What cost did I incur in the current period? So we only consider what work we have done as well as what cost we have incurred in the current period. Clear? Whereas when calculating the cost of output, we will take the even cost of opening WA. Whereas under weighted average method, work done is work done. Just take it. 36,000 work units are completed and transferred to next process. Take it as 100%. Even in the cost, take total cost. Opening WAP cost as well as current period cost. Divide the total cost by equivalent units. You will get weighted average price. That is cost per equivalent unit. Yeah. And once I do this, if they ask you to prepare the process account and all, guys, easy. Process account and all, easy. See, opening WAP 3,000. For that, cost would have already been given in the question. Take it. Sir, instead of presenting it individually like this, can I add up everything and put one amount here? That is also fine. Then this is the cost incurred in the current period. Take it. Okay. Then on the credit side, normal loss 1800 units. Scrap value 1,12,500, which we will take here, which we will get here. Yes, 1,12,500. Take it. Then abnormal loss 3000 units. 3000 units. What is the cost of it? 367,335. Then closing WAP, how many units? 4,200. What is the cost of it? 471,790. Take it. Even output, how many units are there? 36,000. What is the cost of it? 4923,275. One thing you have to be careful here is, guys, see, while doing the statement of evaluation for closing WAP, abnormal loss and all, we will take the equivalent units for calculation. But in the process account, when you are presenting, please take actual units, or else units column will not match. You need to present what in the units column? Actual units, not equivalent units. Clear? And whatever cost we write here is nothing but what I would have got in statement of evaluation. Statement of evaluation. Got it? Yes. And if there is any scrap value of abnormal loss, then you will record it separately, guys. You will record it separately. Where is that? Just a minute. Yes, you can see here. First, write whatever you have transferred from process, that is, this figure has to come there. Then, if there is any scrap value of abnormal loss units, record it here. And the balance net loss, transfer it to costing P&L account. Costing P&L account. Okay, sir. Normal loss also same way. Whatever is transferred here, bring it. Later, receive the scrap. Receive the scrap. Yes, sir. So this is all about FIFO and weighted average method, guys. Okay. What is the main difference? I already explained it. Let me go through it once. The main difference between FIFO method and weighted average method is that units of opening work in progress and their costs are taken in full under average method. While under FIFO method, only the remaining work done, that is the work done in the current period, is considered. Then one small topic in this chapter called operation costing is covered. Operation is different, operating is different. Clear? Operation means, guys, I am producing the same products but in different varieties. Different varieties. So manufacturing process is same, sir, but the raw material which I use is different. The raw material which I use for each kind of variety of output is different, whereas the process is same. Whereas the process is same. For example, assume I am a shoe manufacturer. Clear? So I manufacture different types of shoe. The process is same, but depending upon which shoe I will manufacture, the raw material also will change accordingly. Clear? Yes. Process is it same, sir? Clear? So operation costing is nothing but when you are producing the different varieties of same product using different raw material, but the same manufacturing process. We call it as operation costing. Let me do. This product costing system is used when an entity produces more than one variant of final product using different materials, that is raw material, but with the same conversion activity. Conversion activities means manufacturing process, which means conversion activities are similar for all the product variants, but material will vary significantly. Operation costing method is also known as hybrid product costing system, as material costs are accumulated by what? Either job order or batches, because material will vary from product to product or from batch to batch. Say, same kind of shoe, I can manufacture 100. So in that case, can I follow batch costing? Yes. Next. But conversion cost, that is labor and overhead costs, are accumulated by department wise or process wise. So in the manufacturing process also, I might have different processes. Process 1, 2, 3 like that. So for conversion process, I can either follow department or process costing method. Better is process costing method to assign this cost to the products. Example of the industries which will follow operation costing is ready-made garments, shoemaking, jewelry, etc. Clear? Yes, sir. So this is all about the process costing chapter, guys.